Boom. There we go. We are live. Hello. Welcome, everybody, to the Stock Market Open. We've got 11 people here in 11 seconds. That's what I'm talking about. November 28th, 2022. Eeyore was right. It's going to be a bloody Monday. It does look like it's going to be bloody. Paralegal, look up MCB. You're welcome for the easy money, boys. All right, we're about to look up MCB. And Cameron, good morning, everyone. Hope you have a good Inflation Friday. I love that you called it Inflation Friday because basically $9.1 billion spent on Black Friday just on the internet means that there is likely going to be some inflation. Seth Roth, hello. Surrey, Emmanuel, Sasky, UCUS, Richard, Jarek, Miami Rem, DRK, Miyoko. Welcome to another Market Open, November 28th, 2022. I hope everyone had a phenomenal Thanksgiving weekend. Thanksgiving was really fun for me. Got to spend some time with family. Got to watch a movie after. This is probably the first time in a long time that I sat and I watched the movie. I watched the movie. Let me know if you guys have ever watched it before. The movie was called Up in the Air with George Clooney. I watched the movie like 3 years ago, and Tristan, my videographer, was at my house over Thanksgiving, and we just watched it again. And he said he wouldn't like it, but he ended up liking it. There's a nice plot twist at the end for those that have watched it before. So it was pretty cool. Let me just say in my Discord that I am live right now, and then we're going to get into the markets. I also met Gary Vaynerchuk on Black Friday. That was super, super cool. It was exciting to meet him. I've consumed this guy's content for so long in my life, and I actually got to meet him, so that was really cool. Actually getting a chance to meet him. I put a video on it as well. Wake your ass up. Yes, exactly. Meet Kevin says there was no shopping being done, but Jeremy says that it was insane crowded. Well, the numbers prove $9.1 billion. There was definitely money that was spent. So it was definitely happening. What's wrong with China? They are doing what the rest of the world did in 2020. Well, the problem is they are doing it in a little bit of a harsher way. So the first thing we'll get into right now is the China story. I talked about it, or we talked about it a lot on the Daily Cabal. We analyzed it in depth. But the core thing that's going on right now, and let me share my screen right here. Thank you, 67 people being here on a beautiful Monday morning. President Xi Jinping has few good options to end the historic China COVID protests. Now, what's important to understand about this is that since 1989, when the Tiananmen Square happened, and excuse me if I'm wrong on the date, I believe it was 1989. I might be wrong on that. But that was the last time there were massive, massive protests in China. What does that mean? Well, that means that for the past 40 years or 30 years, there hasn't really been a revolution against the state, against the CCP, fighting for freedom, fighting for democracy, fighting for the ability to not be living under an authoritarian regime. Now, whatever you may think of the CCP, I think it's hard to deny that some of their policies absolutely are bizarre in terms of human freedoms. And for the first time in a long time, the zero COVID policies have gotten to such a level that people are actually protesting in China. This is similar to what's happening in Iran. The religious freedoms are getting a little bit too extreme and people are deciding to protest. And it's kind of the same in China, except for religious freedoms, more of actual lockdowns that are currently going on. So we say here, discontent with COVID-0 has been building as the proliferation of vaccines and relatively mild variants prompted much of the world to abandon virus restrictions, as has what happened in the United States. Even as party leaders were gathering in Beijing to affirm their Xi's third term, a lone protester hung banners on the city's stone bridge calling for the end of his rule, as well as COVID restrictions. Heb Chen, a market analyst, says, I strongly believe this will be a history-making event that will change millions of people's lives and the country's future. The citizens' anger, although I doubt it will change the notorious COVID policy, is poised to raise the current for an unsettled, turbulent, and low productive phase in China's history. And that's important. That's important because this is not going to change the crazy policies that exist in China. Okay, probably nothing is going to change that. What it will create potentially is the precedent for a disruption in the status quo in China. And like all we can ask for is a precedent, right? We in the West, we take for granted that we fought an entire war in the 1700s to be able to gain our freedom, right? And since then, a lot of things have happened, but we are here at this point where relatively we have more freedoms than anyone else in the world living in the United States of America. That doesn't exist in a lot of places of the world. I mean, in Qatar, you can't even drink alcohol. That's how crazy some of the freedoms are, or the restrictions are. So the idea that these protesters could set a precedent that actually changes the geopolitical landscape of how China interacts with its citizens would be profound. Now, is it actually going to happen? It's unlikely, given the CCP. If they give in even a little bit, they start to delegitimize the sort of reign they have over the population. But I mean, if they give up a little bit, if they give up an inch and the Chinese citizens go for a mile, and the CCP doesn't seem as much of a threat as they were before because some protests are able to stop them, then you never know. I mean, you never know what could happen. You got to talk with Sprenz or China Fact Chasers. Tom had a fantastic interview with Sprenz. Those guys have been reporting the truth about it for a year. Yeah, I agree. Me and Tom talked about it today on the Daily Cowbell as well. He shed a lot of knowledge as well. Marco, what's up? What's up? Ray, good morning. Their policies are insane. Yes, their policies absolutely are insane, which is why investing in China is also a very difficult thing to do right now. Like, how could you invest in any Chinese company knowing people aren't allowed to leave their house because the government is like, it's a difficult thing to do. Getting into the US markets, S&P down 0.87% pre-market. So we are below the 400s. I think this is a defining week in the markets. This is a defining week. Why? Because we have CPI data on December 13th. I was looking at a couple of tweets from, I gotta find the account, but there's a Twitter account that's tracking, doing a very statistical analysis of inflation. And they say we're going into 6.5% inflation next read. Now, if that happens, if we get 6.5 from 7.7, which I don't think is going to happen, but if that happens, this Santa Claus rally is actually going to be insane. Granted, I don't think that's going to happen, but I do think inflation is going to go down a little bit. And so the week before we get CPI, about a little over 2 weeks we're away from it, I think is a pivotal week, which is this week in determining where the market is tending to go. We only have one more month left for 2022. So, the S&P is at 402. If we look at it on the 1 year, the S&P started right here around 470, right? 474. That was the top, or 478. And we went all the way down to 348. We had a massive decline, and now we're rebounding up just a little bit. So this week, I think, is going to tell us a lot about where we think things are ultimately going. Ramat says that's why Warren Buffett is selling gold. This is true. So Warren Buffett has started trimming his position in BYD, which is probably the only Tesla competitor that actually really is doing decently. And Munger has started to sell off his BABA. Now, he said it for tax harvesting reasons, but, sure, it might be some tax harvesting reasons, but he did buy at a very high price, and it's not at a very high price anymore. I think he loaded up like 132 million when it was at $160. That was back in December. I remember making a video about this. January 2022. It was very early, or like late December. So, I mean, we're going to see kind of where it turns out. Travis, good morning. ZOH Cold, good morning. Nicola, great YouTube channel. Thank you. MCB, before I head to class, let's check out MCB. A paralegal, can you give us a quick summary of what MCB is? Also, what class are you going to? I'm always curious. And is it a college or in a master's program? I'm always curious to know this stuff. Metropolitan Bank, market cap of 732 million. Let's look at the 5-year. IPO'd in $36, 2017, went to a high of 115, so it tripled. Now it's back down to $59. Price to sales is at 3. That's not bad. I was about to say that's not Brad. That's not Brad, Chad. That's not Brad. 52-week low, 59.29. So this 52-week low is not as low as it is from now. It's about 10% higher from the 52-week low. Metropolitan Bank. So let me look it up real quick. Let's see what stock this is. It's illegal to talk public now in China. Yeah, mid to high midterm specializes in 5 million to 200 million net worth individuals. So it's a private it's an investment bank, I'm assuming, or a boutique wealth management firm for high net worth individuals. MCB stock. So what's the bull case? Because a bank, I mean, I'm assuming they just take fees off of their. Oh, sorry, the Weeble went away. I'm assuming they just take fees off of their clients to manage their money. Metropolitan Bank Holding Company. Yeah, what's the bull case? Why are you excited about this one? 30% CAGR. Okay. That's the bull case. When someone puts up 30% CAGR, that 30% year-over-year growth as a public company is very difficult. To ask Palantir. They promised they were going to do it, and looks like they're coming in like 23%. Also, we got to talk about Palantir. I'm going to make a video on it later about them potentially losing this $400 million contract, which is kind of true, kind of not true. So we'll get into that. Okay, cool. So we'll go more deeper into this. Metropolitan Bank, this is something for everyone to check out. Obviously, not financial advice. You guys can look at it, but 30% year-over-year growth, trading at price to sales of 3, market cap of 732 million. Its headquarters, I'm assuming New York. I would assume New York for a lot of these boutique investment banks. Only at 8 price to earnings. That's also not bad. Quarantine Cortez, good morning. Management team is great and no accounting shenanigans. Okay, there we go. We'll look at it. Don't be a mega Brad, be a giga Chad. If you look at Apple old-time chart, Microsoft chart, Tesla old-time chart, they were flat for a decade and gives you time to load up dollar cost average every month. That is true. That is true. A lot of these companies were flat. I mean, could imagine Palantir is flat for the next 5-6 years and then it blows up. We'll just have to see. 30 seconds until the market opens. November 28th, 2022. Cowbell is ready. By the way, guys, okay, I need your advice on this. I am thinking of opening up a merch store, literally because people have started asking for merch, and also people want these Audia hoodies. So let me know if you would actually buy any merch. It would really be minimal in terms of the profit I make off that. It would just be something, honestly, to build the community on the channel. Like when people start wearing your merch, it means they actually like care about you for the long term and stuff. And it would help if I could make an extra $200-300 from the channel. Like that would be really nice per month. So it's a lot of work to get it set up. So let me know if you guys actually want that. That might happen probably in 2023 if it does happen. All right, here we go. The stock market, November 28th, 2022, 9:30 a.m. is now open. Wake your ass up. Let's get into the stock market. Google 97.27, Zoom 74.88. Zoom's earnings were not amazing, but Zoom is Kathy sees it being 1,500, so always a stock that I want to look into. S&P 399 down 0.68%. Atlassian Team 136 down 0.87%. Netflix $285. Roblox 31.24 down 1.32%. Tesla, my Esla 1.3180. I was dollar cost averaging at the stock at 184 and 178. Tesla reached a low of 166, so it's up about 10% since then, or a little bit over 8% since then. Market cap sits at $568 billion. Remember, Warren Buffett bought Apple at a $500 billion market cap. So, I mean, if that happens, that would shake everything up. It's probably not going to happen. That'd be pretty cool if it does happen. SoFi, 455, reaching again, basically near all-time lows. The stock has been hammered. Reverse split. Is it happening? I don't know. If the market crashes and SoFi goes to $2-3, it's probably going to happen. So we're going to have to see. I uploaded a SoFi bear case video for all the people who are like, all you do is talk good about SoFi. There's a 30-minute bear case video on SoFi on the channel, so you guys can check it out to understand some of the risks with this company. And we'll be talking about that bear case more in depth on the SoFi Weekly next week. Disney, Bob Iger is back, $97, $80. ARK at 35, still stuck at 30. Baba 74, CRM 153. CRM is not a sexy stock. If we look at it over the past year, it's down significantly. Lows of 136, so up about 10% from its lows. But it's a stock that's aiming to do $50 billion in revenue by full year 2026. Market cap is 153. So if they do $50 billion in revenue, they'll be trading at 3 times sales. I mean, you'd imagine the share price would appreciate by 2026 since then, or till then. Paramount 1916, Baba 74, Spotify 78, DNA, Ginkgo Bioworks $2. Kathy Wood again loaded up 7 million shares. I have not re-entered this position. I am waiting to see if the macro gets even worse and it can get to a little bit to the 180s, 190s, and then I would be more excited to load up on Ginkgo. Very bullish long-term. Macro not going to be friendly to biotech stocks. Apple, wow, look at this one, dropping right below 150 at the 145 range. So Apple touching a little bit closer to 140s. Taiwan Semi at $80. AMD 74. Bitcoin at 16,242 went down and then went right straight up over the weekend. Let's see what we've got going on in the comments. You had your caffeine this morning. You could tell. Okay, so we had here we go. We got a little bit of this guy. We got a little bit. Shout out to 193 people being here. Let me remove the screen real quick. These are when you know the holidays are here. This was beautiful. You see this cup? This was beautiful. I love when we get a little bit of a holiday cheer. It's always nice to see little things like that for the holidays. Can we buy you a new mic off your merch shop? JK, you guys are funny. You guys are funny. Add Costco to the list. We will add Costco in a second. I thought stocks don't have to reverse split unless they're under $1, not $5. Can you speak to that? Yeah, so stocks don't have to do that. In general, that's the NASDAQ listing requirements requires them to be at least $1. The problem is if you're under $5, most people don't know this, but I think a lot of people who will watch the stream probably know this. Institutions aren't really allowed to buy, primarily because you're basically under $5, you're a penny stock. So that's why it was such a big fuss to not make sure Palantir was under $5 because when that's the case, a lot of institutions have rules where they have to sell off the stock, right? And so you want to be above $5. So if SoFi were to do a 10-to-1 reverse split at $4, they would be a $40 stock. They'd probably drop another 20% as soon as they do that, down to like $30. But under 5 is where institutions don't get happy. So you always want to be at least above 5. But under 1 is when you have to do a reverse split. Good morning. Hope is all as well. Good morning. I'm a Tesla, Palantir, and DNA investor, but I just can't get behind SoFi. That's fair. I like SoFi not because of personal banking, but because of the Galileo platform. That's just a long time for that bull case to happen. So we'll see. Ahad, what's up? Felicia, yes to merch. Okay, awesome. Happy to know there's some demand for that. Hey, Amit, how much were your 3 rings? That reminds me, Ruckshit. There we go. 3-ring Amit. He is back. I have the gloves, I have the leather jacket, and now I have the 3 rings. Why? Because life is too short to be boring. These 3 rings cost like $10, so it's probably even cheaper than that. All right, let's get into the talking heads and see what they're talking about. Oh, wait, one more thing I want to cover before we get into the talking heads. Elon Musk and Twitter, something that a lot of people probably have not seen. This was phenomenal when I saw this news. I mean, this news was absolutely insane. Let's share my screen right here. I wish Twitter was still a public company. I would love to see how like the stock reflects this news, but here we go. This is what Elon Musk tweeted. Let me zoom in for those who can't see because this is really important to see. Okay, there we go. New user signups at an all-time high. They are getting 2 million users a day. This is a company, if you look at this chart, it might be a little hard to see, but July 1st, 2014, they were getting close to like 800, 700,000 new users a day, and it stayed like that for years. Until around 2022, the only reason it spiked up is because Elon Musk said he was buying it, so the media started covering it like crazy. And now, I mean, the media, you know, I'm part of the media technically, even though I'm not as big as CNBC, we can't stop talking about Elon and Twitter. 2 million people per day. That is incredible. 2 million people per day. User active minutes also at an all-time high at 8 billion user active minutes a day. I did the math, so you don't have to do the math. That's 5,555,000 hours spent per day on Twitter. Now, YouTube has 500 hours of video uploaded per minute. I think YouTube has a couple billion videos watched every hour or something, or maybe every day. So YouTube's obviously still bigger, but nonetheless, that's a lot. Hate speech impressions are lower. MDAU, monetizable daily active users, passes 250 million per day. That means those are the people that are using the platform that can be monetized. I am seeing more ads in my feed that are relevant. I tweeted about hot sauce. 5 seconds later, I got an ad about hot sauce. I mean, like that doesn't happen on Twitter. I was like, wow, this is relevant. I might actually click and buy this hot sauce. I mean, like this is, it seems like the targeting intrinsically got better. Hate speech impressions are low. Reported impersonation spiked, then fell. And this is the 2.0 Twitter everything app. Advertising is entertainment, introducing video, encrypted DMs, long form tweets, relaunch Blue Verified, and then having payments. Payments on Twitter would be a big deal because companies like Square and Cash App, which is part of Square, they get so much data and like little tiny fees off people sending dollars that they're able to just do so much with that information to make Twitter into a place where you send money to people. I mean, that's a very, very big deal. Facebook tried to do that. Facebook was, not really that successful with trying to do that. If Twitter could do that, that would be insane. Amit, you got a fresh lineup. I see you, my guy. I appreciate it. Yes, I did get a little bit of a fresh lineup. All right. So Twitter obviously becoming an everything app. I mean, this is the bet on Elon. I mean, I had a bet with my friend, by the way. We went to New York the other week, and he said he's a software engineer, right? Super smart guy. Like tons of respect for him. He said Twitter's going to implode. And I said, look, because he works at a software engineering company, he knows how hard it is to do software engineering. He's like, you can't fire 80% of the staff and keep it going. And my argument was like, bro, it's just tweets. Like, it's not that complicated. He's like, yeah, but there's this server side infrastructure. I'm like, bro, I get it. I get you understand the tech. But at the end of the day, 1,000 people to manage tweets being like, it doesn't seem that complicated. And also I was like, you're betting against Elon. And we had $1,000 bet that by 2026, if the company is turned around, which what does that mean? I think we'll all know what it means by 2026. Then, he has to give me $1,000. And I texted him the stats yesterday. I was like, how do you feel about this? And he was just like, oh, it's going to implode. All the advertisers left. I was like, I don't know, man. I think they have a shot. Okay, let's look at consumer spending. Black Friday was obviously amazing. Let's see what that means in terms of the macro. All right, let's play this here.
Carol, we are into the holiday shopping season. There's a lot of questions about the economy, a lot of questions about the consumer. You've been doing this a while and watching these things. How do you kind of measure this holiday season with others?
It's tough to compare it directly to last year, given the changes in retailers brought inventories in substantially earlier this year. Sales have been happening, basically Black Friday sales since October. We've seen that given a lot of those inventories. And it's one of the reasons why we saw a lot of goods on floors back in August and September. We saw a lot of holiday goods out already. But consumers overall seem to be doing okay, but that shift in spending towards services over goods really seems to have taken hold, and inflation is clearly on everybody's mind too. I think there's some level of almost revenge spending where people are trying to spend on others, they're trying to engage in trips and experiences and things like that. But we'll see how that carries over into January when those credit card bills start hitting, because we know a lot of people that have half their savings moving into credit cards. And so when credit cards hit, and most likely higher energy bills than last year as well. It could be a softer early start to the year, at least
Yeah.
psychologically.
I'd heard, up 2% or so in terms of sales for that Black Friday and the holiday weekend, more than $9 billion, but you're still talking about with numbers that don't keep up with the pace of inflation.
Exactly. You've got that inflation impact in there. And then you've also got the shift in goods, and we don't know how profitable that couple of percent increases for the retailers, because there definitely were a lot more sales going this weekend than there were last year for certain, but in the last few years. So washing it all out, it'll be the end of January, beginning of February before we truly see the full impact for the retail sector.
Ross, you say you wouldn't be surprised if we retest the lows before the end of the year. That's a pretty big drop.
It is, but I think, the basic fundamentals of the market, are just not quite in line yet, right? You have a multiple on the S&P 500 that is attractive, but certainly not as low as we've gone in past bear market bottoms. And then you have earnings estimates coming in, particularly for 2023, pretty rapidly as analysts revise lower. So if you just put the two things together, if we got a bit of a valuation compression, if we got rates a little bit higher again, if the Fed came out hawkish, and then you continue to see pressure on the earnings side as margins get squeezed, as maybe there's less of a consumer spending impulse. I think it's certainly possible. I think the Fed will view their job as not quite done and will jawbone hawkish again, kind of into year end, even if.
So this is likely something. I mean, he's making a really good point here, right? Like, at the end of the day, what does it mean for consumers to spend $9.1 billion on Black Friday? What that means is that what Jerome Powell wants to do is to get people to stop spending as aggressively that they're spending. And Shopify's GMV, which is the amount of money that actually went through their services, like the amount of money that exchanged hands, was also up, I think, 30% year over year. I'll pull up that stat. Which is just absolutely insane. It's great for independent e-commerce. It doesn't make sense in the grand scheme of things, which is the same thing happening with the S&P, right? So why are some stocks down 70, 80% over the year, but the S&P is down, I think, 10%, 15% for the year? Like, or maybe even, I think it's at 8% now. When it was at 402, now it's at 398. The S&P is holding up relatively well in comparison to how bad some other stocks are hit. And which technically shouldn't be the case. And then you've got consumers spending massive amounts of money, inflating the crap out of this economy. Something is not like this puzzle doesn't make sense. And what that means is the likelihood of some potential massive crash happening, because we're still stuck in a bubble, might be the case. But then you check your biases against that, because you're like, earnings were amazing for all these big tech stocks, and companies are likely oversold. But then the question becomes, if the PE ratios of those companies were valued on interest rates that were close to 0% for the past 14 years, then maybe the whole price to earnings metric that we use to value the market writ large is simply too high. Let me bring in another scenario on this, because our boy Puru had a good little analysis on this back in, or like literally two couple of days ago. Or I think it was yesterday. Yes, let's look at this. This is the similarities between some of the issues that are going on in the current market and the dot-com crash. And I think it's important to, whether he's right or wrong, it's important to understand a little bit of this analysis. So he says, this cycle is very similar to the 2000-2002 TMT bust, tech wreck in both cycles, relative outperformance in old economy, Dow Jones industrial strength in both cycles, meaning the indices were high back in 2000. The Dow rallied hard in late 2000 as well, as we can see from this chart right here. The rally going up, and this was like the collapse of 1998, and then it went right up. Lots of similarities. TMT bust, tech top in nearly 2000, tech wreck. S&P top in March 2000, persistent yield curve inversion in mid 2000, recession in March 2021. Current cycle, tech top in late 21, tech wreck. S&P top in January 2022, 478, persistent yield curve inversion in mid 22, and then the question is recession in March 2023 in general. In the TMT bust, the old economy outperformed, then tanked during the recession. Oil stocks kept rallying and topped out almost a year later in 01 before declining 50%. In the current cycle, the old economy has outperformed. These are like the Warren Buffett stocks. XLE has rallied for a year post S&P peak. And so the Black Friday numbers to me just signaled how confused the market currently is, because if consumers are spending, that means they have disposable income. So where is this money coming from, and why is it going back into the market? Is it coming from consumer credit card debt, which is at an all-time, like, it's a hard puzzle to kind of put together. to see what's happening. Dude, Peru is very annoying on Twitter. The reason I agree with he's annoying on Twitter is because for most of 2022, he was on the train that we've hit the bottom. Like every month, he was like, this is the bottom, this is the bottom, this is the bottom. And then he finally said, freak it. I didn't want to curse right there. That sounded so awkward, though. He said, F it. I'm going to short the NASDAQ. And now he has to win that 2023 is a crash. Because if 2023 rallies, he's going to lose a lot of money on a short. Would you buy more Palantir in the current macroeconomic climate? I like Palantir under 8. I'm not buying anything, though, really. Like I bought 18 shares like last week because, everything's a little bit confusing. DCAing is totally fine because if you're holding it over the next 10 years, so under 8 is not a big deal for me. But right now, I would be waiting a little bit. What's with the massive 3 black ring? It's 3 rings. It's I don't know, man. I just decided to do it. We were like, let's just see what's happening. Okay, Apple, China shutdowns are not a concern for Tim Cook. This is important for any Apple stockholder. Let's listen to some analysis on Apple.
Violent protests at the biggest iPhone factory in China causing.
Now, remember, Apple is shifting a lot of their production to India as well. So the China protests that are happening are going to implicate its supply chain. So we're going to see how that ultimately turns out for Apple products.
Big problem for Apple. Bloomberg report this morning says the tech giant will face a production shortfall of close to 6 million iPhone Pro devices this year as a result of the situation in China. Joining us now is Gene Munster, Loop founder and managing partner. How much of what you know do you have a high degree of confidence in, Gene, that you know the full story? And does anybody?
I think my confidence is about 30%. We're obviously working behind China's censorship. Some of the reporting has been limited. What we do know is the big brush is that these protests are unique, the magnitude, the scope of them, and it is noteworthy. We can try to frame in, that's news to me on that 6 million number. It's the number that I have is a little similar to it in terms of the impact. To answer your question, is what do we know? How do we frame this in for Apple? Is that the iPhone 14 Pro production, if you assume that it's impacted by 1 week, that would be either because of the COVID shutdowns or some of these protests at Foxconn, that's going to impact about 1.5% of revenue for the December quarter. So it is measurable. If you figure it's 2 weeks, it's 3%. Pretty simple, straightforward math. That we do know. We also know there is a history of when these supply chain issues have hit Apple production, that they have missed numbers or it has been negative impact in the quarter. In the subsequent quarter, they typically get those sales back. So to answer your question is lots of unknowns, but there is a clear arc here. And the arc is that there is turmoil, obviously, around iPhone production in the March quarter. I would just add one other piece to this, too, is I don't think these production issues, I don't think these shutdowns are a concern for Tim Cook. I do believe what keeps him up at night is a much bigger issue, and this gets to something that we have better clarity on. And the bigger issue is that China is, they are determined to be self-sufficient to lead from their perspective. And what that means is that we have issues like tariffs, we have issues like production supply chain, these COVID lockdowns, the protests. And what keeps Tim Cook up and potentially even Elon Musk up at night is trying to navigate what is a longer, more complicated picture around production in China.
And there's so many moving parts. That's the thing that's kind of mind-boggling, all interrelated too, because you don't know how long the COVID response, you don't know what the COVID response is going to be in the first place. At this point, it's still lockdown. So you don't know how long that takes. You don't know how that reconciles itself. Then you throw in the wild card of these protests. And that's got, you just broaden the whole discussion to the entire CCP and everything else that goes up. Maybe not yet in China, but we always are quick to say, I wonder if this is the beginning of something. I don't know how and then the third unknown is that you really don't know what you don't know in terms of what actually leaks out that's accurate from China. So it seems like a huge black box. Should you sell the stock?
No, I don't think you should sell the stock. I want to talk about some of those unknowns and, that layer.
Okay, so this is important. Then we'll analyze after, but this is his thoughts on if you should sell or not sell.
Approach too is, yes, there are unknowns. And I think that the bigger issue, again, related to these unknowns is how these companies play this for the long term. And I think if you had a view that Apple was going to be committed to doing the majority of their production in China over the long term, you may consider selling Apple stock. I think in this case, they're making some measurable moves to diversify away. is they give their supplier list out. It comes out a year late. So we just got the 2021 supplier list. And basically just over 50% of of Apple's revenue comes from products produced in China. It's down from low 60s in 2020. So it's going down. And notably is that of the 150 new manufacturers that were added to the list, 80% were from outside of China. And so I think that speaks to Apple's commitment to starting to diversify away from the region too. And then the question more about the near term, that's the long term. I think the more important question, the near term, it was, I think, a strategically wise move by the CCP on Saturday or the weekend to try to say that there may be some loosening of some of the COVID restrictions that may take a year to get there. But when it comes to protests and your point about are these protests going to escalate, I suspect that they, if I was going to guess, I think they probably start to moderate because of that strategic move.
Right.
Yeah, so I mean, Gene makes a lot of sense there in terms of the protests moderating because of the strategic move by China. And, how much tenacity do the Chinese protesters have to continue to keep this going? This is a lot of stuff to do. I mean, I don't think anyone wants to protest for this long. Let's look at Apple stock right now. Now, remember, the real interesting thing about Apple, okay? This is what is important to understand about Apple. Apple will hit a $3 trillion market cap at $180. Warren Buffett will have 5x his money since then, 5.5x his money when he bought it at $500 billion in 2016. For the market to give Apple $3 trillion of value, which the market has never given to any company ever, except Apple briefly for a couple of days. I remember I made a video on Apple hitting 3 trillion on December 28th, 2021. And I was going to post it 2 days later just to have it in my backlog. And then when I wanted to post it, it was under 3 trillion. I was like, okay, I can't post this anymore. But for Apple to hit 180, the market has to be ready to accept that. And I don't think it's that easy for the market to accept that. It's at $145 right now, $2.32 trillion market cap, did $90 billion in 90 days last quarter in their Q3 earnings. That means $1 billion of revenue a day Apple made. And the reason it's so important to analyze this is because you have to ask yourself a fundamental question. iPhone 14 sales are not that fantastic. Is iPhone 15, 16, 17, 18 going to be fantastic? Are people still going to care about buying this thing, which is the core driver of their businesses? The reason they gutted Meta and Snapchat and all the other small companies that need to use their infrastructure because they control the gateways to information, they control the pipes in society when it comes to the internet, is because they need to double down on their advertising business. Why? Because services is their next sector of growth because they can't keep making the same profits off hardware because people already have the best stuff. So either they introduce a new device, which is their mixed reality headset, which I just don't think is going to be that big of a deal. I just don't think people care that much, or they double down on services. And until they show the market they can sustainably do that, because this last quarter is a little bit, it's a bit misconstruing because it's like, yeah, they made some profit off this, but they made some money off these new phones, but can they keep that up quarter up? They have to put up more than 90 billion next quarter to show growth. I mean, that's not an easy thing to do, man. That's not an easy thing to do. So we are going to have to be able to see. We should have an Aldea icon on the belt. You guys are inspiring me to start the merch store. I might start it soon before Christmas. You guys are inspiring me to do it. Even if only like a couple people buy it, I think it would be nice to help to build the community. So let's see. Maybe I'll launch it within the week. It is tough to build out a store. I did Shopify stores a couple years ago, so I am familiar with it. But let's see. Let's see if I do this. Amit, thank you for doing the live stream. It's so nice to hear you talk about the market without plugging your courses. So nice on the ears. And that's the reason I haven't done merch in so long, because I hate people plugging their shit, bro. I hate, as much as I love Meet Kevin, every 5 seconds saying buy the stupid coupon. Bro, at some level, it's just it's diluting your audience. But he has so many people that it doesn't matter, right? Because the law of big numbers. But I think that if I started merch, it would actually be because you guys wanted to support. And it actually helps build the community on this channel. It's not going to be making thousands and thousands of dollars. So yeah, we'll see. We'll see if I can get it up there. So that's the problem with Apple. I am not a buyer at Apple right now. I think 3 trillion is too much for the market to handle. I think for a long time, 3 trillion is going to be gun to your head, is the market going to let Apple go to 3 trillion over the next year? I don't think so. I really don't. And as a result of that, I'm not a buyer. 128 is the number we want to look out for. That was the last level of support. 128. So it's at 145 right now, right? So let's do 145 divided by 128. It's up 13.2% from its lows in June 24. If it goes to 180, so if we do 180 divided by 128, it would be up 40% from the lows. I don't know in this month or in the next year if Apple is going to go up 40% from its lows. S&P touching 400 again. This index is not going, it's not crashing as we thought it would, or as it should with the rest of the stocks. So it's staying the way it is. And that adds to the level of confusion we have. Apple will be 10 trillion by 2023. Now that, or 2033. Again, now here, that's actually a good point, practical investing, because 3 trillion seems like a lot right now, just like 1 trillion does. But in 10 years, $1 trillion due to inflation and just like technology, it might mean nothing. $1 trillion might be the next $500 billion market cap. So 10 trillion is possible. I think it's just a question of in the short term if we're going to see if that happens. This is why I unsub Felix and Friends. Shout out to Felix and Friends. I like the guy, but I also don't like that he's plugging his options course every second. Bro, like, again, I don't want to put hate on any other YouTuber, but like, I can't stand that sometimes, bro. Like, I cannot stand, like, I understand marketing. I understand promoting yourself. I cannot stand just consistently every 5 seconds. By the way, you could learn this if you were in the options course. It's like, bro, like if the options course is so successful, then go trade options, right? Like it's not the most pleasing to hear. So I feel your pain there. I want Trump to become president again just so I can hear him say China. Bro, when someone asked him, they were like, why do you call it a Chinese virus? And this man stood up straight in their face. I don't even think he was trying to be serious. He was like, it came from China. I like died laughing. Like my mom was laughing, bro. Like, my mom's not even a Trump fan, but she was like, what? This is the most funniest shit ever. It was so hilarious. It was so funny. I think with recent YouTubers amidst genuine no shit and honesty and not shitting on you in face will shine long term. I hope so, because that's authenticity is, I think, the key to grow a channel. And that's the main thing that I want to do. Robert James, Amit is not a stock trader. This is not a stock trading service, nor he does promote it as such. FYI, you don't need qualifications to be a trader. Yeah, I don't trade stocks. I try to invest and give my analysis on what's going on. Okay, so there we go. We have S&P at 399, ARK still at 35. Meta. Let's talk a little bit about Meta. What's been going? So the other thing I forgot to mention when I was doing some macro analysis on like recession, when we're talking about Puru, is layoffs. I mean, this is a big deal. So my cousin who came from India, got a master's in comp sci in University of Amherst, she's struggling right now because she cannot stay in America unless she gets sponsored by a company. A company means, like for her work visa, which means for her to actually get employment, a company has to hire her. She's really panicking and she's struggling because she's seeing all these people, leaving their tech jobs or getting laid off, which means they're going to go back into the market. So it's going to cause a lot of saturation. I ultimately think she'll get a job because she's just amazing at computer science. Like she's phenomenal. She's one of the smartest people I know, much more smarter than me. So I think she will be fine, but these layoffs are a big deal. So with these layoffs, the stock price might go up for Meta because, shareholders are happy the costs are going down. But what does that mean for the macro? I mean, when companies are doing those substantial types of layoffs and we see those corporate hiring freezes starting even further in 2023, and the S&P still stuck at 400, it just doesn't make sense. It's like, okay, at one point, are we going down another leg? Because of these massive layoffs. Now, on one hand, layoffs are good, as I said, because shareholders like that, costs are coming down. So that might help prop up the market a little bit. And also tech layoffs, I talked about this before, are different than blue collar layoffs, right? Like these white collar jobs being laid off. These people have money, they have, savings accounts, they have investments, they could probably get other jobs at startups. So it's a little bit different from the average economy and regular people getting laid off. I hear Twitter is hiring. Yeah, well, that is true. Twitter is hiring as well. CrowdStrike, did they have earnings this morning? CrowdStrike 139. Hold on, let me look at it real quick. If CrowdStrike, I think it's no, it's November 29th. It's November 29th. Okay, so CrowdStrike had earnings November 29th. Okay, cool. So that's not, so we will be looking at CrowdStrike, cybersecurity stock, very important. We will be looking at that. Let's look at one more clip and then we'll be done for today. Mohammed El-Iran, one of the analysts that I actually trust, he's going to be analyzing the China unrest situation and what he thinks is going to mean for the macro. Let's go to this clip. Okay.
Mohammed, I have to start with the news of the day. With China, the impact on the equities markets, the impact on the commodities markets, what you think about the economic impact as well.
So I think the impact on the commodities market makes sense because it's pointing out to slower economic growth, and the commodity markets won't be impacted by the supply disruptions. On equities, I'm surprised it's not more differentiated when it comes to US equities. I think the main story in the US is the Fed. So Wednesday will matter, is the labor market. So Friday will matter. China, unless it gets to a geopolitical issue, I don't think it should matter as much as people seem to think it should matter for the US market. So Europe, completely different. Asia, completely different.
And Mohammed, just in terms of the unknown with COVID, I mean, it's one thing to try and figure out how the Communist Party is going to react. It's another to try and figure out how COVID will react to a population that doesn't have the natural immunity the rest of the globe has, and that has not really made use of that time with some of the Western vaccines.
Yes, it's totally baffling. You know, we had the issue of lives versus livelihood, and we flip-flopped till the vaccines came along and allowed for a certain degree of herd immunity. China has been trying to do COVID zero policy, never got out of the lives versus livelihood dilemma, has flip-flopped. Now the population's patient has been tested. And as Joe rightly said, don't underestimate what happens once the genie is out of the bottle. But they could solve it. They could solve it by bringing in Western vaccine. Now, to be clear, you don't solve it immediately. It will take a good 6 months to get herd immunity. But the longer they wait, the more complicated. And if they go the other way, if they go through crackdowns, that's going to make things worse. So they can solve this, but they cannot solve it immediately.
Okay, let's talk through the implications of some of the companies doing business there. We've already spoken this morning about Apple. You've got Nike, you've got Tesla, some of the companies that are really reliant on the supply chain in China. How do they isolate themselves from this? How do they insulate themselves from this, I guess is the word I'm looking for. And what do you think about those stocks? You've got Apple shares down by 2% this morning.
Right, and that one I understand. VW is another one. Look, you cannot rewire supply chains overnight. Karl Bass was absolutely right. It takes a long time to rewire these supply chains. So what does it mean for those companies? It means supply uncertainty. What does it mean for us as a whole? It means a possibility that between what's happening in China, between the change in globalization as a whole, between reshoring, nearshoring, we may have an issue where inflation gets stuck at around 4%. That's how it really matters to us ultimately, is that the supply chain issues, the change in globalization, wages, all that means inflation will not get back to 2% quickly. That's what it means for us. But for the companies involved, it means it takes longer than they would like to rewire the supply chains.
So pretty much the same analysis that we've been saying all morning. Obviously, it's going to be hard for supply chains, it's going to be hard for more companies to trust China, and ultimately China is going to keep cracking down, and eventually these protests will stop. But the question is if the Chinese citizens have the ability to actually fight against it. New Daily Capital is going to launch probably in like an hour, where we pretty much analyze this entire situation from top to bottom. There's really, I mean, this is the biggest thing that's happening right now. And let's see if there's steam to the story, because if these protests continue and there's steam, it will keep going. If it dies out, then it just won't end up happening and things will go back to normal, unfortunately. But I mean, we will have to see how this plays out. Tesla, making sure the supply chain is in the country they build their cars is going to be something more companies will see the wisdom of. I agree. I think it's also important why Tesla, has expanded to Berlin. I think South Korea is the next on their list from a couple of things I saw, which would be, amazing if they are able to expand to South Korea. So we will see how that goes as well. Ayo, you're talking too fast. I take that as disrespect. This is actually, I'm trying to slow down a lot more in my videos. I'm trying to consciously talk slower. I think some people like it. Some people don't like it. I think the majority of people do like. That's just how I talk. But I do want to slow down a little bit. It would make it a little bit easier for everybody. I know that. Okay, that's it. 220 people. Thank you for joining the Market Open live stream. I appreciate you so much. Last couple of days in November. Got to make it count. Got to work hard. We're getting into the last month of 2022, which is insane to say. 2022 has been a wild ride. I hope everyone had a great Black Friday, great Thanksgiving, and onwards and upwards. Let's see what this market has in store for us. Thank you guys so much. BlockFi filing for bankruptcy. It's not that crazy news. We probably knew it was going to happen, so makes sense that it's happening. Thank you, everybody. I will see you later throughout the day in more videos and tomorrow on the Market Open. Bye-bye.